The introduction of financial statement and budgeting. Financial statement and budgeting contain the expected financial result, position, and cash flows of a business. These financial statement and budgeting include an income sheet, balance sheet, statement of cash flows, and statement of change in equity. The statements are compiled from the annual budgeting model of a business. Financial statements and budgeting are particularly useful when creating a new budget model, since one can view the impact of adjustment to the model on the budgeted statements. Next, types of financial statement and budgeting. Firstly, the income statements. The income statement reveals the financial performance of an organization for the entire reporting period. It begins with sales and then subtracts all of the expenses incurred during the period to arrive at a net profit or loss. An earnings per share figure may also be added if the financial statements are being issued by a public health company. So this is usually considered the most important financial statement since it describes performance. Secondly, the balance sheet. The balance sheet shows the financial position of a business as of the report date, so it covers a specific point in the time. The information is aggregated into the general classification of assets, liability, and equity. Next, the statements of cash flows. The statements of cash flows reveals the cash inflows and outflows experienced by an organization during the reporting period. These cash flows are broken down into three classifications, which are operating activities, investing activities, and financing activities. These documents are difficult to assemble and is so more commonly issued only to the outside parties. Lastly, the statement of changes in equity. The statement of changes in equity documents all changes in equity during the reporting period.
The importance of managing personal financial statements and budgeting is that we can differentiate between what is an urgent expense or requirement and what is not. And this has become the most crucial aspect in personal financial management. Budgeting also enables you to avoid spending money that you don't have. It is also important in an emergency setting in which there will be unexpected twists and turns. Other than that, the importance of managing personal finance statements is that it can put a restriction on our spending. As we know, budgeting is a crucial component of personal financial management. So limiting spending is one of the other fundamental concepts of personal financial management.
Hello everyone, my name is Abdul Kadir. Today I will present the current issue of personal financial statement. A survey that has been made by Ringgit Plus Malaysian Financial Literacy Survey revealed their survey that Malaysian financial habit have changed since COVID-19. In this survey stated half of the respondents still spend exactly the same or more on what they earn or more, while on the other side of the respondent revealed that they are not be able to survive more than 3 months on their saving after they lost their job. There are over 60% that are unaware of their available debt restructuring and rescheduling scheme, such as moratoriums and debt repayment assistance, despite the crisis of the pandemic COVID-19. Next, in 2021 until 2022, the government granted the withdrawal of EPF to the Malaysians to help their financial planning and expenses, and also to inject and boost the purchasing power in Malaysia. In the survey also shows that 70% of Malaysian EPF will not be sufficient for their retirement, and another 45% will not begin their retirement financial planning. They found more than 49% of Malaysians does not have enough saving, at least or more than 3 months' salaries, and 34% admit to spend their salary equal or more than their salary. The first stated that they found is Malaysians have no choice but to own a car. This issue raised as the public transportation network in Malaysia is still limited, such as LRT, KTM, Putra and more. Besides, the alternative transport such as Grab, Maxim have increased their fare progressively. So it can be concluded that most of the Malaysians today did not have a choice but to buy or at least rent vehicle like car and motorcycle. Lastly, there are more 30% of all Malaysians currently live their paycheck to paycheck.
According to a source, there are plenty of consumers facing difficulties in managing their personal financial statement and budgeting, although there are many initiatives have been measured to succeed in a strong financial position. Prior to the first coronavirus lockdown, debt levels were already exceedingly high. Due to this unfortunate event, the availability of credit and liquidity across the globe eventually lowered. Based on the data above, there are three main reasons that faced by the consumers. 42% from the respondents agreed that they don't have enough money to make a plan. People that earn less from their job are most likely facing difficulty in having enough money, which leads them to live by paycheck to paycheck. In consequence of that, some of them had to work double jobs in a day in order to survive and afford a living. For example, someone with a 9 a.m. to 5 p.m. job will continue to work as a part-time in retail industry, especially food and beverage, in order to earn more. As a consequence of this, they feel very exhausted and they will not have enough time to make any plan. From having these too many commitments, they eventually feel like it is too complicated to make a plan in financial aid, so they just choose to give up.
Next, the introduction of consumer credit. Consumer credit is a personal debt taken on to purchase goods and services. A credit card is one form of consumer credit. Although any type of personal loan could be labelled as consumer credit, the term is more often used to describe unsecured debt that is taken on by everyday goods and services. There are two types of consumer credit. Firstly, revolving credit. Revolving credit refers to the revolving line of credit. It offers customers open line of credit which can be utilized to finish the maximum limit offered by the lender repeatedly. Consumer will be required to repay the minimum prescribed payments regularly to keep the line of credit open. Next, the installment credit. This type of credit is generally issued in the case of specific purpose. They can be the purchase of furniture, vehicles, or home appliance. In the case of installment credit, the payments are made in the form of equated monthly installment for a predefined period.
Now let's look at importance of consumer credit. Consumer credit refers to debt incurred by an individual to pay for products and services. An example of consumer credit is credit card. The importance of consumer credit enables users to receive a cash advance on future purchases of goods and services. That can save a person's life, like in an emergency, like a car breakdown, because credit cards are often secure to carry. Consumer credit enables customers to receive an advance on their purchasing power. The other importance of consumer credit can also give feedback and rewards. Credit for consumers, especially credit cards, can give out goods like airline miles, hotel points, and cashback rewards. Moreover, the importance of consumer credit is that you are protected against fraud with credit cards, which also offer features like contactless cards, virtual card numbers, card locking options, and minimal to no cardholder liability for unlawful purchases. Other than that, it is also flexible, in which you can select payment plans that offer quick access to goods and services rather than having to save up for years to pay the entire cost of each transaction.
Now, let's proceed to the next slide, which is the current issue of consumer credit. As a consumer, we have to acknowledge that currently Malaysian government and Bank Negara Malaysia (BNM) currently drafting the Consumer Credit Act, or called CCA. It was proposed by the Bank Negara Malaysia, supported by Ministry of Finance (MOF) and Securities Commission (SC) back in 2017 to protect consumer in their dealings with creditors and to promote healthy spending among the consumer. The enactment of Consumer Credit Act the way for the modernization on the consumer credit regime in Malaysia. It will allow the framework for entities that provide credit and credit savings, along with a consistent blueprint for credit consumer. CCA will be independent authority body, the Consumer Credit Oversight Board (CCOB), and it will separate from Council for Consumer Credit Malaysia (CCC), where the CCOB to come together with existing ministries such as Ministry of Finance, Ministry of Domestic Trade and Living Costs, KPDN HCP. CCA will establish an authorization framework for non-bank entities that provide credit or credit service. This will require entities are directly providing credit to credit consumer be licensed under CCA. There are two, which is licensing, buy now pay later BNPL business, factory business and leasing business. Second, registration, impaired loan buyer ILB business and debt collecting agency DCA business. The implementation of the CCA and the transformation of Malaysia consumer credit will take 3 phases. Phase 1, CCOB will oversee the activities of currently unregulated credit provider and credit service providers. CCOB will issue the standard that adopted and enforced by the ministry and agencies. And then phase number 2, within 2025, KPDN HCP and KPKT will transfer their regulatory function over consumer credit activities to the CCOB. The Moneylenders Act 1951, Pawnbrokers Act 1972, under the Consumer Protection Act 1999 will be repealed and will be amended to support the repeal of the 3 legislations. And phase number 3, within 2030 and above, further enhancement to the existing regulatory framework can be considered. Entities such as BNPL, factory, leasing, ILB and DCA will be licensed and registered by CCOB. Experian Information Services Malaysia have issued a report about Malaysian consumer to maintain credit score following to the COVID-19 challenge. This gain to the facilitate through the government measures such as moratorium, special withdrawal from EPF amounted RM10,000 Malaysia, Bantuan Keluarga Malaysia and Financial Management and Resilience Programs (URUS) repayment assist RM2.7 million Malaysia individual borrowers throughout the second half of last year. Credit risk rate continues to be stronger for age group 36 until 50 with 6% and 29% of those 51 and older lodging strong risk rates. Strong risk rates imply a less than 1% default rate. Overall, it demonstrates that as Malaysian consumer mature, they can manage their credit risk better over time. This is perspective from the present year 2022 to the immediate past year, which is 2021, and the year before pandemic 2019. Next, for the consumer age 22 until 28 years old, non-consumer credit repayment which have fallen to 90 days.
Consumer credit makes it convenient for consumers to pay their bills and access short-term credit. Revolving credit enables consumers to take advantage of immediate purchase of goods and services in the absence of funds or instead of using their savings. Consumer credit, which was extended by banks, retailers and others, experienced unprecedented declines during the COVID-19 pandemic. The data above indicate debt distress among consumers from year 2009 to 2021 in consequence of low to high. It was released based on the finding from trends in credit card, higher purchase, business loan, house loan, mortgage, and auto loan for consumers who are young, elderly, single, or married. It is undeniable that debts can be overwhelming, and sometimes people tend to borrow more than what they can afford to pay back. One of the main reasons that contribute the most to this debt distress among consumers is because the interest charges for consumer credit is extremely high and people are unable to pay back within the due date. Other than that, the data above conclude 36.6% is due to poor in financial planning. while a record of 34.9% is due to high cost of living, 12.3% is due to failure or slowing down in business, losing a job, being laid off, or experiencing a loss of breadwinner, accumulating to 8.9%. High medical expenses also contribute to this data, which leads to 5.9%. As a result, this group of people find it more and harder to make ends, especially in terms of financial.
The conclusion, financial statements, budgeting and consumer credit shows that it is important in our daily life this day. Financial statement and budgeting consists of income statement, balance sheet and statement of cash flow. These statements are compiled from the annual budgeting model of a business. Consumer credit refer to personal debt taken on to purchase goods and services. A credit card or loan is one form of consumer credit. As for financial statements and budgeting, it can help us assist in allocating resources in the appropriate ways. A budget enables you to identify and work toward your long-term objective, as well as compels you to set goals, save money, monitor your progress, and realize your aspirations. Budgeting also ensures you are not spending more you are making, allowing you to plan for short and long-term expenses. It's an easy way for people with all types of income and also expenses to keep their finances in order. And for the consumer credit can help us or a company in emergency situations as loan or credit cards. Having credit enables consumer to buy goods or asset without having to pay for them in cash at the time of purchase itself. Having a good credit record means that the person has an established history of paying back 100% of his or her debts at a specific time. Financial literacy is the knowledge necessary to make important financial decisions. It can help with decisions about budget, debt, and investing. Financial management practices is a field which deals with financial decisions including short and long goals of the organization and ensures that there is a high return on the invested capital without necessarily taking excess finance risk. Budgeting also enables you to avoid spending money that you don't have. The flexibility of the basic types of consumer credit and of terms of repayments makes credit available to most consumers. However, credit may observe the need for financial planning and there is a much high risk of overspending. For a recommendation, consumer credit is offered to individuals through retailers or through larger institutions like credit card companies and banks. It covers any type of personal debt, allowing a shopper to make an immediate purchase and pay the cost of over time, usually with interest. Having credit enables consumers to buy goods or assets without having to pay for them in cash at the time of purchase. Having a good credit record means that a person has established history of paying back 100% on time. Approaching money management and financial planning is a smart way also efficiently can help set up for a bright and successful future. Making a personal budget by creating a budget is a great step in developing healthier money habits and learning how to get the most from your money. This could start by using budgeting worksheet examples like add up your monthly income and add up your monthly expenses. Also subtract your expenses from your income. Next, track your spending, record expenses digitally, and can simply save receipt of every transaction. So help us to get basic needs if an emergency happens and needs to use money that we don't have. Consumer credit provides access to more spending power, which enables people to do things like take home loan or make purchases with a credit card and possibly be better prepared for the future planning. Credit can be a powerful tool that helps to improve finances and get access to better financial products.